Hi guys, so today we will be going over this Wednesday trade on 19th of February. It is now already Friday, 21st of February, but I just want to recap over this trade and talk about a little bit of the lessons that I have learned from here. So if you haven't watched my previous video, you can watch that after this, but basically my previous video was a trade recap for the Monday trade, which was a short, because from this week my outlook was that on the daily we are bullish. We have this previous week high here, and basically I was expecting price to go into this fair value gap or the order block and then return to go back up. So retrace first and then continue to go back up, which is pretty much exactly what price did. So price went into that daily fair value gap. It didn't respect it though, and then it went to the order block and then respected the order block. So instead of using the fair value gap, it used the order block, which I guess it kind of makes sense because I think the daily fair value gap was still in premium, but I guess it makes sense why it went to the order block instead of the fair value gap, because the fair value gap is way up in premium. Basically the narrative for this week was just that we have this retrace and then continuation. So on the 4 hour there is not much to see, but on Wednesday what happened was we got into that daily fair value gap. And because of that narrative that I outlined, I was a bit too fixated on it, thinking that because it's already in that daily fair value gap, I want to look for longs, which is not an incorrect way of thinking to look for longs, but it's incorrect to sort of force it. So if you see on Tuesday, we actually closed below Monday low, and we closed pretty bearish. So naturally, the next draw on liquidity should be previous day low. But again, that's not always the case. That you have to look case by case, because Tuesday we went into a fair value gap, and on Tuesday we actually respected that daily fair value gap, which is why on Wednesday I didn't expect previous day low to straight away just be my draw on liquidity, because it respected this daily fair value gap. So on the 4 hour you don't really see anything, like I don't really see any signs that it wants to be bullish, but at the same time I also don't really see any clear signs that it wants to be bearish. So going down to the 1 hour, this was my trade. I looked for longs here, and it was because we got this SMT, we got this daily fair value gap on Wednesday, and then price went up, and what happened was price closed above this 2 candles, which is basically change in the state of delivery, and then price also closed above this bearish fair value gap, creating a inverse right here, this candle. And then on the H1 we actually did also get a 1 hour fair value gap here. So it was a 1 hour fair value gap, inverse, and also an order block right here, which is why I ended up taking a long here. And that one missing piece is just AMD, or accumulation, manipulation, distribution. Because if you look on the 30-minute, there is a 30-minute fair value gap here. And if you look on the kill zones, there was Asian session liquidity here. We basically accumulated, manipulation, distribution to previous day low. So if you look at this, like, shorts did make sense. Like from a lower time frame perspective, shorts did make sense, just because you can see this inducement range right here, all of these stacked lows. Like you can just see very clearly, like every single low here is not taken. So you can see here it's very clear liquidity, and we have the 30-minute fair value gap as well. Or the thing that was sort of like making me go long was just the fact that we closed above this, and the fact that on the 1 hour it is definitely more bullish just from a PD array standpoint. But something that I pretty much just ignored is that inducement range, which I already saw beforehand, so there's honestly no excuse. And so really the thing that I was reflecting on, the thing that I want to do next time when I see this kind of scenario, is just to be okay with not taking a trade. Because on the higher time frame, in terms of daily and H1, I would like to buy, obviously, like, because aligning with my narrative, I would like to buy. Like it makes sense for us to go down into a PD array and then flip and go to that draw liquidity, right? Which, you know, my narrative is correct in the sense that it went down into the order block instead of the 1 day, but the narrative was there. But the thing that was wrong was just straight out ignoring the inducement range that was really obvious, which is why I shouldn't have taken the long. But should I have shorted is a different story, because I don't think I should have shorted as well, because from a lower time frame perspective, it kind of makes sense to short because there's previous day low, and because on the daily Tuesday closed bearish. But on the H1, it also doesn't really make sense to short. If I was to short, it would definitely be a very lower time frame kind of play, and it would have to be off the basis of AMD. If I was to short, I think it would have to look something like this, which is honestly not a good risk reward anyways, or maybe something like this. Yeah, probably something like this if I was to short. But regardless, I probably wouldn't short in this scenario, just because of the higher time frame narrative that I have. Even though, like, just from seeing, you can see that it is a short opportunity here. Like, you can very clearly see the AMD, like accumulation, manipulation into a 30-minute, and then distribution. And this is also Asian session range, and this is also London right here. See, Asian session range, London manipulates, and then draws down into the previous day low. So, like, either way, it doesn't make sense, but just for me personally, I probably wouldn't have taken that short, and it would be okay not taking that short. It's just, I shouldn't have taken the long either. And on days like this, you have to just be okay sitting it out. And that's pretty much it for that trade. But I also kind of want to talk a little bit about the hourly, so just an update. Yesterday, on Thursday, I actually didn't take a trade at all. What I would have liked is to long, obviously, because the whole week I've been looking for this to be the drawn liquidity, so I would have liked to capitalize on at least a little bit of this move. But it just, like, there was nothing there for me personally that I could see. Like, there was just not much that I could do with, because yesterday there was this fair value gap here. If we went into this fair value gap, I would have liked to long off of it, because there's also equal lows right above it, but it didn't, so I didn't end up catching any longs, because there was also an inducement range here. So I also don't really want to enter off here, because there's no, an inducement range just means it's like chopping, right? And because there's an inducement range, it means that there's no displacement. So there's no 1 hour fair value gaps here, there's no H4 fair value gaps here. There's really nothing for me to trade off of here, which is why I didn't end up trading during yesterday London session, because there was nothing that I could see. Like, you could, I guess you can argue that, you know, closing above this made this an order block, but either way, that's not really, yeah, it's not really the way that I usually trade. And yesterday London session was here, so you can see this is that London session. There's really not much as well. It's just very slow price action until after the news yesterday at like 8:30, I think, or 9:30. Then that's when we started getting momentum. So it's fine to be okay not being involved in price action like this, because I would like to long, but even during New York session, I actually didn't really look at the trade, the market much because of this, because I don't really feel very comfortable longing here when there's no clear PD arrays, and when there's so much liquidity below. You know, it just, like, it's kind of a risky buy in my opinion. So that's why I didn't. I think the moral of the story is that I should have approached Wednesday like how I approached yesterday, which is to just not do anything if the market is not clear, or if there's one missing piece, or if there's one bit that is showing you that you shouldn't take it. Because even though here, all of the, like I said, the H1 fair value gap, inverse fair value gap, all of these things, like the confluences are there, the narrative is just not lining up in terms of the fact that there's just so much liquidity below that it wouldn't make sense to long. So when there's like one bit telling you not to do it, it's better to just not do it at all, because that's, like, I guess that's also like intuition and, you know, your experience speaking to you. Because I know from a fact that I've seen a lot of these trades like this before. I have been in a lot of trades where my brain will rationalize and be like, oh, like this is here, there's this fair value gap here, like all of the patterns and all of the checklist is correct, but my gut will just tell me that it's not right, and it's because of this inducement range. And I guess because in my rules there's not a specific rule that says if there's an inducement range below it, then don't take it. But yeah, like it also comes down to a bit of intuition and understanding and just literally seeing liquidity, that if there is something like that, it's not wise to take it. If you guys have enjoyed this video, remember to like and subscribe, and check out yesterday's video here to see how I shorted that trade on Monday and to see how I came up with the thesis for this outlook for this week. Bye.